This program is brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.
Hello, this is The Global View and you're watching AusBiz. Great you could join us on this Friday. I'm Andrew Gagan. Let's take a look at what happened overnight. Risk sentiment remaining positive with renewed optimism about trade deals. The Pan-European Stock 600 index rising about 0.25%. On Wall Street, the S&P 500 and NASDAQ again reaching new record high closes, boosted by strong results from Alphabet, which has fueled investor enthusiasm about AI-related stocks. Alphabet rose as the search giant's results boosted confidence that heavy investment in a race to dominate the AI technology is paying off. Shares of Microsoft and Amazon also rising along with Nvidia. Tesla, though, it tumbled after the chief executive warned of a few rough quarters as the US government cut support for EV makers. Intel has announced it's laying off 15% of its workforce as it looks to strip costs out of the business. It also forecasts steeper third quarter losses than Wall Street estimates. United Health fell heavily after the insurer revealed it was cooperating with the Department of Justice into Medicare practices. IBM dropped after its second quarter results fell flat. And Honeywell also falling despite topping Wall Street expectations. American Airlines, its shares tumbled after the carrier forecast a big third quarter loss hurt by sluggish domestic travel demand. And the US Federal Communications Commission has approved that merger between Paramount and Skydance. Well, Britain and India have signed a free trade agreement which will cut tariffs on goods from textiles to whiskey and cars and allow more access for businesses. The agreement between the world's fifth and sixth largest economies aims to increase bilateral trade by a further $34 billion by 2040. Meanwhile, the European Commission has said its negotiated trade solution with the United States is within reach, while EU members have voted to approve counter tariffs on $109 billion of goods in case those talks collapse. And the ECB has kept its deposit rate at 2% as widely expected. In the US, business activity picked up in July, but companies asked higher prices for goods and services. Consumer prices increasing by the most in 5 months in June, with solid rises in costs of tariff-exposed goods such as household furnishings, appliances and toys. And US initial jobless claims fell to 217,000, which is the lowest since April. US Treasury yields, they've risen as a trade deal with Japan and expectations of a similar agreement with the EU are expected to soften the economic blow of steep import duties. The 10-year yield at 4.4%, the 2-year rising to 3.92%. And the US dollar traded sideways against the euro after the ECB held rates steady. The Aussie is trading at 65.9 US cents. And Bitcoin, it's trading just above 118,000 US dollars. Oil prices, they're up around 1% as a drawdown on US crude inventories expected and expected cuts to Russian exports. There's overwhelming news that oil major Chevron will gain US approval to renew production in Venezuela. Brent crude futures at $69 a barrel. Copper is off. Iron ore rising around 0.5% to about $104 a tonne. And the gold price has fallen further on those easing global trade tensions. Spot gold at around $3,360 an ounce. So let's get a focus on what we're seeing, particularly on US markets. Brad Gastwirth joining us from Unearthing Opportunities. Brad, welcome back. Great to catch up with you. Yet more records we're seeing on Wall Street with the NASDAQ and the S&P. What do you see as driving that investor sentiment at the moment?
Yeah, thanks, Andrew. Clearly, the theme du jour is still artificial intelligence. We're in the early innings of this monster mega trend, and it's going to continue for several more years. So, those that are related and those that are spending within artificial intelligence will clearly benefit. Those that are not spending as much as they should will be clearly left behind. So the theme du jour, no change there, but we expect the winners to continue to win.
Are you seeing that market breadth improve from this point? Because obviously the focus at the moment is still very much on those mega cap stocks with exposure to AI.
Yeah, and I mean, there's the mega cap have certainly led the way because they're really leading the way within the AI race. But there are some, mid smaller cap companies that are doing a good job internally with artificial intelligence. But I mean, you can clearly it's been very narrow. I expect it to continue to be narrow in terms of the overall weight of the market. But you can still certainly pick and choose on the smaller cap side as well.
Well, let's take a look at one of the companies clearly benefiting from AI. That is Alphabet, having reported yesterday. Brad, what did you make of that result?
Yeah, it's really hard to pick apart and find something negative, Andrew. I mean, they've really been executing on all cylinders on the margins and continue to look good on the YouTube numbers, constantly improving. They're spending almost $100 billion on CapEx to build out their AI. I mean, all things are looking quite good, and they're just executing. They have so many other private companies that they have exposure to that we're not even discussing that could be mega companies themselves. One of those is Waymo, which I expect in the not too distant future to really hold a very strong valuation. And they have a leader in robo-taxis. They have the lead in technology. And I do expect that to be a significant benefit for Alphabet in the coming years.
I see you're also focused there on SK Hynix and ServiceNow. What are you seeing there?
Yeah, so SK Hynix, I mean, they have a leader in high performance bandwidth memory, HBM memory. Essentially, this is really needed in artificial intelligence systems. They are the clear leader. I think they have something close to 70% market share. Now you have Micron and some other technologies that are getting better within HBM. But SK Hynix has really done an incredible job. If you look at their operating margin and operating profit, it's gone, up and to the right dramatically. I mean, the numbers that was just reported were phenomenal. So that company is clearly executing. And if you look at ServiceNow, Andrew, I mean, that's probably one of the best enterprise software plays there is. I mean, that company is unbelievable execution across the board, having new clients on a global basis that are going to be incredibly additive for them for the years to come. Both those companies you mentioned are absolutely good ways to invest in AI.
Now, elsewhere, Brad, of course, we heard from Tesla. It's still very much stuck in reverse.
Yeah, I feel like it can't get out of its own way, Andrew. I mean, if you look at the margins continue to decline, they continue to compete on price. You have, unfortunately, the Musk effect, where here in the States, it used to be a status symbol to own a Tesla. Now it's gone a lot more negative for people wanting to buy, and numbers are just down. The only reason the valuation is still as high as it is for their next generation on the robo-taxi side and on the robotics. So if they execute there is a growth story for sure. But it's been several quarters in a row that we've gotten disappointment, at current levels and current, where we are currently with the fundamentals. I would be avoiding Tesla stock here.
All right. Now, Brad, just a little more broadly, looking at the macro backdrop at the moment, what are you seeing with inflation? I mean, anecdotally at least, in the shops, are you seeing those prices rise as a result of those tariffs?
Yeah, and it's a great question, Andrew, because I think some people, especially when I talk to people overseas, they don't realize how much inflation is really taking place here in the States. I mean, it's hard to find things that are anywhere near the same price they were 12 months ago. On the fuel side, we've actually seen a recent uptick on oil. So you've had that hit pockets. On food and energy, prices are much higher. So I think real inflation people are paying for real goods is much higher. I think that's one of the concerns with interest rates here, where clearly I'm sure on a daily basis, at least here in the United States, but I imagine globally too, there's a lot of comments about President Trump wants interest rates cut here, and there's a lot of disagreements with our Fed chair. So I think if there's a move in that department, I think we might get rates cut sooner rather than later. But right now, prices are significantly higher, and I don't expect that to ease. I think they're going to continue to go higher, and it will go even higher if rates are cut.
Well, as you pointed out there, Brad, obviously the president putting enormous pressure on the Fed chair. Do you Do you see it any chance that he will go before the end of his term?
I don't think so, quite honestly. I think he's going to dig his heels in and not cut rates. I think if you look at, the economic factors, the market, it really doesn't warrant it currently. You have inflation ticking up. You have a very healthy market at all-time highs. You could certainly argue you don't need to be cutting interest rates at these levels. That being said, if you look at our debt, we got a lot of debt that needs to be repriced. So I understand the rationale of taking rates lower to have a lower, base for all this debt recalculation.
Now, Brad, obviously, given those equities are continuing to take record after record, is there still a place for precious metals in your portfolio? Take a look at the gold price in particular. It's certainly stuck in consolidation phase at the moment.
Yeah, I mean, it hasn't moved a lot in the last few week or so, but if you pull up a medium-term chart, that asset is still up and to the right. I absolutely believe that precious metals should be owned in portfolios. Gold and silver, absolutely. I think they're tremendous hedges. If we do get some uncertainty, if we do get some, craziness on the macro side, it's one tangible or those tangible assets that have recognition globally. Two, from a government perspective, you're seeing more foreign governments investing in gold. And then on the silver side, it's still used within manufacturing and other components. So I think they're absolutely investors should have exposure without a doubt.
Brad, great to get across what you are seeing on US markets. Thanks for joining us on Unearthing Opportunities.
Thank you, Andrew.
Turning our attention to the local market just before we get going. So SPY futures indicating we're going to have further falls today, off almost 0.5%. We will get across that in just a couple of minutes.
This program was brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.